Let me take a wild guess. You're the type of trader that wins $100 on your green days, but on your red days, you end up losing $500. You could go a whole week without any losses, but when that one red day comes, you end up giving back the entire week of gains. Unfortunately, this is a problem that over 90% of new traders face, and you slowly see your account bleed out and you know that the end of your trading career is coming. We need to put an end to that right now. Over this lesson, I'm going to be teaching you different strategies on how to be able to reverse this current rut that you're in and making sure that you have $500 on your green days and $100 on your red days. We want to see your account progressively grow, not progressively decline. So we're going to be going over stop losses. We're going to be going over 2-to-1 ratios, and we're going to be talking about entries and exits, making sure you know exactly where to be pulling the trigger to have the highest chance of probability. If you guys enjoyed this lesson, make sure you guys smash that thumbs on up and subscribe. Help me reach my goal of getting to 100,000 subscribers. Other than that, get that notepad out and get ready to learn. Let's head on over to the lesson. Today, we are going to be going over stop losses, learning what stop losses are, how to use them, how to place them, really being able to save your account. Now, you have probably heard me say this in the past, and you'll probably hear me say it many times in the future, but how many people out there in the stock market have this as their account? How many people, if let's just say we have a normal X and Y axis, and this is your account right here, and let's say you start with $5,000 in your account and you're trying to grow it on up. How many people have this? Hey, Deck, I just had a very nice win today. Hey, Deck, I just had a nice win today. Oh, Deck, I just took one loss. All right, Deck, let me see if I can build my account back on up. Let me see. Okay, I have a nice win today. Okay, I have a nice win today. Okay, I had a little win today. Oh, Deck, I just took a really big loss. Oh, Deck, I just took a really big loss. And now you're at zero. How many people here, when they trade, they end up losing $1,000 when they trade, and when they win, they only win $200? How many people here, when you trade, you win $60? But when you lose, you are losing $400. How many people here have their trading reversed? They always can make a very big loss, but they can't ever get a very big win. And this is where we want to be able to figure out how can stop losses make our trading better. What is the point of stop losses? So stop losses is something that you are here, and I'm going to be frank with you. You are going to watch this lesson, but 99% of you are going to ignore this lesson. 99% of you are going to have this lesson go in one ear and go out the other. And there's unfortunately nothing I can do because this is your call. This is your money. I will show you why you are losing. I will tell you how to fix this problem. I will show you how to place stop losses, why we use stop losses. But the majority of people just refuse to use them due to ego. They just refuse to use them. They refuse to place them. So what is a stop loss? A stop loss would be if I see a stock that's at $5 and I see a stock that's moving up to $5 and I say to myself, hey, I think this is going to break out. So the stock starts going on a very nice spike and I say, all right, I want to jump in on it. If I jump in because I saw it break the $5 resistance area, I can place a stop loss at the price of, let's say, $4.95. So if I have 1,000 shares, we'll make it very nice and simple and easy. If I have 1,000 shares on this play, every dollar that the stock moves, I make $1,000. Every 10 cents the stock moves, I make $100. So if I, let's say, jump in on this play at the price of $5.05, I saw it break $5. I think it's going to go on a nice spike. At $5.05, I jump in. And the worst case scenario happens. The worst case scenario is it starts falling back on down. Well, right when it hits $4.95, guess what happens? I'm out. The worst thing that can happen is I lose $100. That's worst case scenario. But what's best case scenario? Best case scenario would be, what if it does break out? And what if it does start going on a nice spike? And what if it does start going on this nice climb? And we do start going on this nice rip and nice run? Well, now I'm not losing $100. I'm actually making, let's say we go on a 70-cent climb here, I can make $700. So this is absolutely great and absolutely awesome to know. So what's the issue? The issue is on trading is that we don't have this stop loss. We eliminate the stop loss. And we say to ourselves, all right, hey, the stock's starting to come back on down. And it hits $4.95 and we don't have any stop loss there. So we just say, all right, let's see if it comes back on up. Let's see if it comes on up. And now it's starting to come back on up. And you say, see, it's starting to come on up, and then it dumps on down.
And now you're down 300 bucks. And you're saying, all right, let's just give it a second. I'm going to try to eliminate this loss the best I can. Let's just see what we have here. And it starts coming on, and then it starts dropping on down. And now you're down 500 bucks. And now you're saying to yourself, man, I might as well just hold it for a little bit. I might as well, maybe it'll come back on up. And by the end of the day now you're down $2,000. And it's just like, why are we down $2,000 when we could have literally only been down $100 on the day? Well, I was hoping it would come back on up. Well, guys, I hope that I open up my refrigerator and there's just a big sack of money in there. I hope I open up my front door and someone accidentally just says, hey, I'm kind of tired of driving this Lamborghini. Do you want it? Yeah, I do. Woo! Right? It doesn't do anything for us. So for us to say, let's place a stop loss right here, we're able to consistently be able to have profit. So the only way that we are not going to consistently be winners by doing this is by just not knowing where to enter. And if you don't know where to enter, that really just comes on down to support and resistance. You have to study your support and resistance levels. And I would tell every single person to head on over to the video library. And if you guys really want to be able to become great with support and resistance, watch Support and Resistance Part 1, Support and Resistance Part 2. These are lessons we did in 2023. They're updated, they're brand new. Watch Support and Resistance, watch trend lines. Then on top of that, watch entries. So if you can go ahead and watch support and resistance, you'll learn where to enter. Trend lines are also going to teach you where to enter, and then our entries and averaging in will give you the best entry out of support and resistance. Because stop losses are after we find that perfect area right here. Now we can say to ourselves, hey, we know where we can reverse at. We know where, if it starts falling, we're dropping. This is where people like to use the strategy called the 2-to-1, right? What's 2-to-1? 2-to-1 means you should always be winning double than what you lose. So a very easy way to just be able to understand this is if, let's say, we start with a $2,000 account. Start with a $2,000 account right here. And we follow this 2-to-1 ratio. If I win on my first trade, I move on up. And let's say I lose 2 trades. I lose. 2 trades should equal 1 win. So if, let's say, I win again, and let's say I win again, and let's say I win again. Let's say I lose here, I lose here. Let's say I lose here. Let's say I win again. Let's say I lose here. Lose here, lose here. Let's say I win again. I win again. Let's say I lose here, I lose here. Let's just say I win again, I win again. Boom. Traders, let's count it up. I have 1, 2, 3, 4, 5, 6, 7, 8, 9 wins. I have won 9 times. 9 wins. I have at this time how many losses? 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 9 losses. Is this crazy to think about? I have 9 losses. And what does my P&L look like? My graph looks like this. I didn't win every single trade, but I just went from $2,000 to now upwards of $10,000. How did you make an additional $8,000 while you won 9 times, but you also lost 9 times? Shouldn't that be 0? Well, that means if your money is exactly the same. If your money is exactly the same as in you win 10 times, you lose 10 times, then yes, it would be at 0. But remember, we're setting stop losses. So since we're setting stop losses, we are going to be following this very strict 2-to-1 ratio, which means every win we have is double than our loss. So what we can really think about it is when we win, we want to be making $1,000 on every win. And when we lose, we want to lose $500 at most. When I win, I want to be able to make $500. And when I lose, I want to be able to lose $250. When I win, I want to make $100. And when I lose, I want to lose $50. If you actually follow this, if you actually follow this game plan, you will be a consistent stock trader. If you actually follow this game plan. But the issue is 99% of you guys will not follow this game plan. And it's not me calling you out. It's just that most people aren't going to follow this game plan. Because I'll say right now, hey guys, S&P 500. Let's take a look at a live example right now, okay? S&P 500. We have our dip buy here, dip buy here, dip buy here. Hey guys, we're starting to crack the trend line. Most likely, we're probably going to start seeing a little bit of a sell-off. Have a stop loss right here. Get out of this play, have a stop loss. It's time to move on. Let's see if how well this would play on out for you, right? If all of a sudden it starts dumping and starts holding, you might say to yourself, all right, hold on, Deck. I know I should be getting out right here. I know I should be getting out at this time. But see, look at this. Look at this. It's now starting to bounce back on up. It's starting to bounce back on up. See, I'm okay. This is where we start not even having a game plan and we start forming very bad habits. Okay? So I'm going to tell you another very big issue that happens. This is going to be an issue that you will face as a trader, and it will be frustrating, and it will be annoying, and you will get angry at it, and you will get very upset at times. And you're like, okay, this doesn't sound good at all. You will have very strong support going across the board, okay? And you will see that a stock is going to be coming on down. And you're going to say to yourself, okay, I'm going to look for a dip buy. I'm going to get filled off this support line. I like it. You're getting filled right at this bottom. And you know what, Deck? I'm going to have a stop loss right here. All right, awesome. And you know what's going to be very frustrating is the stock falls. You try to be a smart trader. And you say, okay, you know what? I got to get out. I'm going to take a $300 loss. I'm going to get out of it. And then the moment you get out of it, it spikes right back on up and it starts going on a big rip and run. How many people here has this ever happened to? How many people here have ever had something similar happen to you like this? Or let's reverse this. Let's imagine if this stock at some point, team, was going on a very big spike. And you said, all right, hey, I want to look for a break of resistance. I think we're going to break out. I think we're going to go on a massive spike. I'm going to buy in on this play. And the stock goes on a little bit of a spike right here. And you say, you know what? I'm going to jump in. It's going to break out. But yes, I'm going to have a stop loss right here. And then guess what happens? The stock falls on down. And it comes down here and you say, all right, let me be a smart trader. Let me listen to Deck. I'm going to get out. I'm going to take my $300 loss. And then 2 minutes later, boom, eruption. 2 minutes later, massive spike. 2 minutes later, ginormous breakout. And you're saying, if only I kept on holding, I would have made money. And what's the big issue here, team? The big issue is now you're developing bad habits. Because the next time you trade, the next time you get involved into a play, guess what you're going to say to yourself? You are going to be in on a play. It's going to go down to your stop loss. And you're going to say, no. Last time I got out and it went on a monster spike. So I'm just going to hold this one because they'll probably do the same thing. And now this one does start falling. And this one does start fading. And this one does start getting weaker. And this one does start, dropping all the way on down. And then you start saying, oh man, if I get in on the play, it goes on up. If I get out of the play, it goes on down. I win on this. I lose on this. I can't do anything right. Right? And that's where you start getting yourself in some really big emotional turmoil. And next thing you know, you're just gambling. You're just hoping for the best. You're just saying to yourself, oh man, I hope this works on out, right? It'd be like the same exact thing, the S&P 500 right now. Your stop loss should be hitting. And you'll be saying, oh man, maybe it'll bounce back on up. Maybe it'll bounce back on up. Maybe it will. But maybe it's not a game plan. When you get into a play, you should always have a set in stone entry, a set in stone exit, and be able to figure out this plan exactly the way that you want. So you might say, all right, Deck, show us here. I might say 436. 436, I could see we have a lot of old upper shadows, tops. 436. 436 is your entry, or 436.15 is your entry. Let's have a stop loss at the price of right here, 435.90. And stick to it. Have an entry at 435.90 and say, if you go underneath this area, it's not worth it to hold because guess what? It's collapsing right now. And it's dropping even lower. And it's still fading. And if it doesn't hit 435.90, then keep on holding because you're good to go. But then say, all right, well, what's my exit? My exit here is now up towards this price. My exit is now up towards the price of 437.10. Where now I can say to myself, I even have a visual on look how little I can lose and look how much I have to win. If I'm incorrect, I'm incorrect. And I'm only taking a small loss. But next time I do have a win, it's going to go all the way back up here. It's going to go all the way and make me all this money all the way up to the top area. How great is that? How awesome is that? That, if I am correct and when I will be correct, because you will be correct, at times, you're going to be able to make all of this. So, well, Deck, I have been correct at times. I have been correct and I just still don't make my money. Well, that's just from lack of confidence. How many people have been correct on a play, but then the moment it gets into the green, you take your profits? Oh, Deck, I'm down $200. Okay, I'm back up $80. I'm getting out. Well, the thing is, you were down $300 and you didn't get out, but you're taking profits when you're up $80? That doesn't seem like that makes sense to me. So you're telling me you're willing to lose a ton, but when you make a little, you lock it in? Well, that's not following the 2-to-1 ratio. Yeah, Deck, I was down a lot, so I just wanted to kind of make my money back and then break even. Okay, I understand that at some points. I understand that at sometimes. But if you're telling me that, oh, Deck, I'm up $80, I'm locking in my profits. Woo! Guys, big win today. Deck, I'm up $180. I just took my profits. Yes! Deck, I just made $123. Yes! Hey, Deck, I'm down $500. Do you think it's going to come back? Where's that mindset on the way down? Where's that mentality as in, I'm down $80, I'm down $150, I'm down $200, let me get out. You're saying that's a massive win for yourself, so wouldn't that be equivalent to a massive loss? Where's that? Where's that mindset? Why don't we switch that way in any sort of way? So it is extremely important that you guys see that and realize that and understand that. So that's what we need to be able to break on down here. So when we talk about our stop losses should always be at, it depends on the play, but I always like to give it a little realistic wiggle room. So let's go over some examples here. If I want to trade Tesla, okay? Tesla is a stock that likes to go on very big spikes, very big rips, very big runs, very big climbs. The first thing about placing a good stop loss is having a good entry. So where would be some good entries here? Maybe off of the pre-market high, right? Pre-market high could be a great entry. Maybe even off of where we had this little dip after our next leg on up. So if we have a great entry, it's going to be very helpful to placing us on a very easy and great stop loss. So we could say, okay, that's my entry, 224.40. We know we should bounce off 224.40. If we don't bounce off 224.40, let's have a stop loss back on down towards around 224, right? We're giving it a little wiggle room. We're giving it 40 cents to be able to get a bounce. And remember, we're trying to really nail that perfect bounce play. Now, if it goes underneath 224, we can adjust. And we could say, well, Deck, it's probably going to fall all the way on down towards this old top area of 223.30. Okay, awesome. 223.30, let's have a stop loss at around 222.90. Give it around 30, 40 cents right here. But it's all about having a great entry for us to be able to know where the great stop loss is going to be, right? That's very important for us. So let's go ahead and change this though. Let's say, Deck, can we give 40 cents away over on, let's say, TMBR though? 40 cents from 280 would be all the way down to 240. That's way too much. So when a stock is only $2, I might only give it 20 cents. I might only give it 15 cents. If you're saying I can't win 15 cents, then don't have a stop loss of 15 cents. If you're looking at a play, I'm looking for maybe something a little bit quicker, like, if there's anything hotter in the penny stock world, we can just go back over towards, the S&P 500 here. The S&P 500 has gone from 437 to 439, 439 down to 436, 436, now back up to 436.27. Do you guys think it's a realistic area? Is it realistic that we can go back up to 437 today? The answer is yes. That's very realistic. We were all the way up at 439 today. So after having this bounce, if you wanted to jump in even right now, 436.10, stop loss at 435.75, that is now saying at this moment, hey, look it, I'm getting out. If this comes on down towards the red line, I'm in right now at the blue line, and we have room to run up towards 437, this green line. So this is basically telling us and giving us an easy visual on where support, where resistance is at, how much money we can make out of this play, and really allows us to see this. So if you are still struggling with this, one of the best ways that I think you guys could, have a stop loss is place your stop losses. Don't do mental stop losses, place your stop losses. But when you guys have stop losses here, I would do either trailing stop percentage or trailing stop by dollar. So what's a trailing stop? A trailing stop is going to be, I think, the best beginner, the best family-friendly stop loss you can have, okay? So what's a trailing stop loss? It is exactly as it sounds, okay? A trailing stop loss is going to follow the stock. So if I say 10-cent value, if the stock falls 10 cents from where I want it to, or from where my entry is, from where it peaked out, I'm going to immediately get hit. If I change it to percentage, I could have it 10% of my investment. If I lose more than 10% of my investment, I come on out. Or again, 10% from the high. So what I mean by this is, watch this, guys. So let's just say we have a stock that is moving on up. Okay, we'll just say we break $5. Boom, we break $5. We start jumping in on this play. I can jump in on this play right here. $5, boom. Then I place my trailing stop, let's just say for 15 cents. 15 cents down. That's going to be bringing us down towards the price of $4.85. Here's my trailing stop loss right here. Boink, right? Now, as the stock moves on up and the stock climbs, the trailing stop loss is going to follow. And we will follow until this play crashes more than 15 cents. So what's so great about this is sometimes we might be moving on up and we fall on down 12 cents. Well, we didn't hit the stop loss, so we start moving ourselves on up. And maybe again, we fall on down 9 cents, but we keep moving on up. And this whole entire time, the trailing stop loss is just sitting right here at the 15 cent mark. And maybe all of a sudden, this play starts bouncing out and then boom, it starts cracking. Well, the moment it hit the minus 15 cents, you are now getting out of this play right here. So it takes away human emotion. It takes away human ideology of as in, oh, maybe it'll come back on up. Oh, maybe this will climb. Maybe this will get a spike. Maybe this will get a move. So a trailing stop loss by either percentage or again, trailing stop loss by either dollar amount, as in cents or dollars, is great. So I could jump on in on the S&P 500 and I could say S&P 500, if I lose more than 2% of my investment, get me out of this play. But I want to win 5% of my investment. But if I'm down and I'm down, 2%, 20%, 50%, whatever you want, you can go ahead and have that trailing stop follow it, and that's just going to help eliminate that human emotion. So that's going to be extremely great. But I know, guess what's going to happen? You're going to hear a lot of people don't set stop losses. A lot of people have mental stop losses. A lot of people do this or that, right? If you are losing set stop losses, I will tell you right now, nobody likes to lose, including myself. But I would rather lose $80 than $2,000. I would rather lose $200 than $3,000. And guess what? Yes, guys, there will be times, and I'm telling you this right now, there will be times that you are going to jump in on, let's say, the S&P 500. Let's say you jumped in on the S&P 500 and you have a stop loss at 436 and you're saying, please don't hit 436. It's at 436.11. Come on, just hold 436. I don't want to get out of this play. It's at 436.09, 436.10. And there might be a point that it goes down to 435.92. And you say, oh, man, I got to get out of this play. And you get out of it, and next thing you know, it shoots all the way back on up. You still have to stick to the pure fact of stick to your game plan. Because if you don't stick to your game plan, you're now just gambling. And if you're just gambling, you're just hoping for the best. And if you're just hoping for the best, you are going to end up losing your account quicker than you could say. So I want to make sure that you guys are all set and you guys are all good to go. Obviously, no matter what your broker is, you guys can set stop losses. If that's just trailing stops, if that's trailing percentage stops, if that's stop on a quote, like stop on a price. So whatever you guys want, you guys can set stop losses. And I do not know how to set stop losses on every single broker. I just want to show that out there. So I would contact your broker today and I would say, can you send me a tutorial video on how to set stop losses? Every broker has an entire video library on entries, on exits, on how to buy in after hours, buy in pre-market, all that stuff, and how to set stop losses in different ways. So I would say contact your broker to be able to set stop losses and follow that. Listen to it. So very, very important. Other than that, take this, run with it. Make sure you guys start applying it so you can become a better trader. I trust you guys. I love you guys, and I know you guys can do this.